Today I have another trading strategy for you, in this case a scalping strategy that you can use on the 1 minute, 3 minute or 5 minute chart. Personally, I use it on the 3 minute chart because it also has a bit to do with price action. The application is incredibly simple. Today's video content, a complete detailed presentation of the application strategy. You will also see that the entry, take profit and stop loss are all specified in detail. This means you can set limit orders here and then let the trade work for you. The good thing is I've also created a list for you so that depending on the stop loss distance, you can use the appropriate leverage to ensure you only ever risk 2% of your trading capital. And then I also have a few live examples for you from today's trades using exactly this strategy. But before we get started with the video, I would really appreciate it if you could leave a comment and a like under this video for the algorithm. And if you haven't subscribed to the channel yet, make sure to do so. But now, let's continue with the strategy. Let's get started now with the application and see how everything works in detail. As you can see here, I've completed 3 trades so far today. 2 of them have been profitable so far. The last one, unfortunately, has been consolidating for a very long time. I'm still curious to see how that one will turn out. It's the same with Bonk, if I can quickly show you that with Bonk. Today I had a losing trade with Bonk, and here's one that is currently in profit and is hopefully on its way to hitting take profit. And now I have all these markings here and I want to explain them to you in detail. If you look further over here, you'll see that everything is really just based on Fibonacci. Here we have a stop loss that's set at the Fibonacci retracement level 1. We have an entry at the 0.618 Fibonacci level with a risk-reward ratio of 1 to 1.6 and another entry with a risk-reward ratio of 1 to 1 at the 0.5 Fibonacci level. The take profit is always set at the 0 Fibonacci retracement level. But how can you set this up yourself? I want to show you that as well. For that, you simply use the standard Fibonacci retracement tool that you have here. When you activate and click on it, it won't look like this for you at first. Instead, it will look like this. I'll quickly go into my settings, select my classic Fibonacci and show you. This is roughly how your Fibonacci will look. But to change it so that it looks like this, I'll show you what you need to do. For that, I go back into my scalp setup where I have all the settings the way I use them. That means I have the 0, the 0.618, the 1, and the 0.5 Fibonacci retracement levels activated. What I also did is set the color green with 100% opacity for the 0, the 0.618, and the 0.5 levels, but the 1 level is the only one that's red because it represents the stop loss. Once you've set everything up like this, you can scroll down to Template, click on Save As, and then rename it here. I just call this YouTube for now and click Save. The good thing is, I can adjust the Fibonacci at any time now. For example, I can switch to my SK mode here, I can go back to my regular Fibonacci here, or I can use my template just as I have it now, with Scalp. You won't have this text in the middle here, but you can simply enter this text yourself and write anything you want here. Now let's briefly talk about the setting regarding whether you should trade the 0.5 or the 0.618. I'll make this a bit bigger now so it's easier for you to understand. We actually have 2 options. The first option is to trade everything using the entry at the 0.5 Fibonacci retracement. The advantage here is that you get a lot more trades that are actually executed, because the 0.618 isn't always reached in scalping mode. The downside, however, is that you need a much higher hit rate, since here you only have a risk-reward ratio of 1 to 1. I want to show you this again in this example. That means I risk 2% of my capital and I gain 2% of my capital. But if I say I'm satisfied with a few less trades and in return have less loss than profit per trade, then I can set every entry at the 0.618 Fibonacci. Then I have a risk-reward ratio of 1 to 1.6. That means I always win 1.6 times what I would lose. Overall, that also makes sense, because the win rate can be lower here, but you have a few less trades that get triggered. The good thing about this strategy, however, is that it doesn't matter how far away the stop loss is. Let's assume now that you use the 0.5 Fibonacci retracement as your entry, and in this case the stop loss is 1.1% away. That would be our loss. And normally you think, okay, if my stop loss, but in this case, if it's set further away and I enter here, then I would have a 1.4% loss. That's why I've prepared something for you, because I mentioned a 2% rule. That means I want to risk a maximum of 2% per trade. I've prepared a list for you, and at the end of the video I'll share it with you again so you can take a screenshot. But what is this about? As a small example, if you use 10% margin per trade, that means with a $10,000 account you would use $1,000 per trade. But that's really just as a cost value, which I'll show you again in a moment. Then you can check, okay, earlier I said I have a distance of 1.4%. With a distance of 1.4%, I can use a 14x leverage here to risk a maximum of 2% per trade. But if you say, okay, I'm not someone who wants to trade with $1,000, so not with 10%, but maybe with 20%, there's a second list for that, and you can set it up here as well. Because if I say I want to use $2,000 per trade, then I would only have a 7x leverage here to risk a maximum of 2%. The cost value is important. I want to briefly explain that to you now. I'm now on Bitunix, and you have this on every exchange. Where you enter, for example, how much you want to trade, you have the option here to switch between the coin quantity, the nominal value, which means the leveraged value, or the US tether cost value. I personally prefer to trade using the US tether cost value. And what I showed you earlier is also set to the cost value. If I now know that I use $2,000 per trade as my own margin, which is then leveraged, then all of this applies here as well, including the settings for stop loss and the specified leverage. Of course, all of this is without guarantee, but these are exactly my settings. If you now say that you might even want to test all of this completely risk-free, so that you can hit stop loss without actually losing your own money, then I'd like to do a bit of self-promotion. If you register with Bitunix using my link, you'll get $10 just for signing up, limited to the first 300 users. But don't worry, we're still far from reaching that limit. But there is also a deposit bonus of up to $400. For example, if you make your first deposit of $2,000, you'll receive a $400 bonus, and every trade that hits a stop loss will be deducted from this $400 bonus, as well as your opening and closing fees per trade. This means you can afford to mess up a few trades here before you actually lose any of your own money. Check it out. And if you're not already on Bitunix, I'd be happy if you join. If you use my link, you'll benefit from it as well. But now, let's continue and see how to apply this in detail. Earlier, I only got the notification that the bong trade had hit its take profit, and honestly, I didn't do anything else except set my entry in this case. It was the 0.05 Fibonacci, set my stop loss, set my take profit, and just let it run. And that's the great thing. I don't have to sit in front of the chart the whole time, because now is when it gets interesting again. My take profit has been reached, and now I can do a new analysis. But how do you actually apply this in detail? We're going to use Solana as a small example for this now. The good thing is, if you do all of this in scalping mode, you have an incredible number of opportunities to trade these small trends here. Here you have a small downtrend, a small uptrend, then another downtrend here that even lasted longer, and that's over the entire period. Because every little movement that Solana makes, or any coin you use for this, can be used for potentially profitable trades. If we look at this example now, we enter this downtrend because I want to show you how a trend reversal works and how to enter trades, but also what happens when it goes back down and where we can find new entry points, since sometimes a bit of patience is required. It's important that you have some knowledge of price action. At the end, I can also link you to a video where I explain price action in detail. What exactly is price action in relation to a trend? If we know that we make a low, then a lower high, then a new lower low, then another lower high, another lower low, and even go a bit further, another lower high. And the same thing happens in an uptrend where we say, okay, we've now broken a high here and then continue upward in this pattern. Price action is actually quite simple once you understand it, but this is exactly how you apply the Fibonacci area. Let's take this small example now. Here we have a small uptrend, so you can also see what it looks like during a reversal, when you have to take a stop loss, yes, and then a downtrend, followed again by an uptrend. We'll go through this briefly in detail. In this case, for example, after this downtrend, our last higher low, that is the last high candle, is here in this case. And if we now get a trend reversal here, it's always important, before we analyze and possibly enter a long position, to wait until a candle closes above the last lower high, just as it is in this case. Because then I have the confirmation to say, hey, now I can draw the Fibonacci retracement. And if I now take my Fibonacci and say, I take this low to the last high, where we broke upwards, you can immediately see how the price made a reversal here, touched the 0.5 Fibonacci level, and instantly hit the take profit again. But how does it continue from here? How do I want to proceed if I say I want to reach the next target? And in that case, it would look like this. I would now redraw the Fibonacci, because after this new high that we had here, that was our last candle high, only when we break that again with a new candle highlight, me zoom in a bit more so you can see it better. That means our next new candle high was exactly this candle high, and here there was a rejection. We reached our take profit and closed with a new candle high above this one. Then I draw my Fibonacci again, in this case to this candle high, And you can see that the reversal that came in here already brought us back to the 0.5 and 0.618 levels and once again took the take profit. If we just take this as a small example, because as I said, that was our last one, we have now reached one, or actually two take profits, so two positive trades in this case. Now we have a new candle high. If I draw it in again now, because here was our last low with the new candle close above it, and in the live chart it's like this. If it closes above that, then you already draw in the Fibonacci. But of course what you have to do is, with every new candle high, you move the Fibonacci along with it. And here you really have to pay attention. Where does the high end? Where do we have a reversal? In this case, we can see that this was our candle high before the 0.5 Fibonacci was traded here. But what we saw here now is that our stop loss was triggered. And due to the 2% rule with this leverage, we've now won twice and lost once, and overall we're still profitable. And now it gets interesting, because we're moving into a bearish price action. We've now closed a new candle low below the last low we had. And now of course it would be interesting to see if we can find an entry here. I'll just pull this in like this now, and then of course you trade it and look. Do you find an entry somewhere here? You can see here this is actually a good example. This Fibonacci level doesn't always get triggered. So what could you do now? If the distance is already getting too large, you have the option to say we're making new low send in this case. We've made a new low again, so I take this next candle high and then trail it step by step until a proper reversal comes, where I have another entry opportunity. That didn't happen in this case, nor in this one. You can see it only down here. If we include this now, that was our candle low. So far we've trailed it, had a recovery, the 0.5 was triggered, and then it went down and the take profit was hit. But in this case, we didn't have a new low. That means now we simply wait until we've broken through this last lower high to the upside. And where did that happen with this candle? I can draw that for you again. That means now I go over here. This candle hasn't closed above it yet, but this candle has closed. So what do I do again? I take the last low to the last high and expect a reversal there. And here the price drop landed exactly at the 0.5 Fibonacci level. And you can see here with the next two candles, the take profit was hit again. In this case, it was a long position. Butane, this is important to see, we still haven't closed above the last high. Now it's time to be a bit cautious, not to enter a long position immediately, but also not to go short. Why not go short? Because we first need to break below this last candle's low here. Where did that happen? If you look at it now, I'll make a bit of space. It was exactly with this candle. I'll draw it in again. There's our last candle low. The candle closed below it. That means I can now take my Fibonacci again and pull it down from the last high here. In this case, that was our last candle low. And what happened here? We had a retracement up to the 0.618, but also a bit above it, and then we hit our take profit down here again. And now you see the magic, because I can just keep repeating this process one to one. Again, we had a new candle low below the previous low. This was now our new candle low. That means when we see that we have a candle close down here, I naturally take my Fibonacci again and redraw it, take the last candle high and pull it down here. That was actually our low because the candle went a bit further down. Then came the retracement. We had about 15 minutes until it was reached. 0.5 was triggered, take profit was reached. And that's basically how you can proceed the whole time. Always trade with the trend, so never against the trend, unless you have a reversal confirmation. You can see here, I think in all these trades there were 2 stop losses and the others were all profitable. Now I want to show what Bonk has done in the meantime. Because here with Bonk the downtrend continued and I was actually able to catch it with further trades in the meantime. And we can see here the take profit was reached. I did exactly what I just explained to you in the video. Here we took the last high after a new low was formed here, with a candle break below this trend. Here we triggered the 0.5 and 0.618 Fibonacci levels. Reached take profit again, once more with a candle close below it. Again I took this new high that formed here, and if I move this aside for a moment, you can see that the 0.5 was triggered again and take profit was reached again. And in the last trade I did nothing different, I simply took the most recent high again after we broke down here. And once again we triggered the 0.5 as well as the 0.618, and the position is currently in profit again. This means I can ride the trend every time without having to wait and wonder when a reversal will happen. Or whether my loss might decrease again if, for example, I open the short here and am unsure when to close it. Instead, I keep taking my profits repeatedly. And today, Bonk was actually incredibly good. I was able to take 1 loss and then 1, 2, 3, 4 profits. Let's see if the last one will actually work out as well. So currently 3 realized, 1 lost, and the last one is going to be very, very interesting. To wrap things up, take a screenshot here of the leverage calculation. So first, right here in this section, maybe hit pause for a moment so you can see how it works. And now I'll scroll down a bit so you have everything included. You have all the leverage calculations so you can use them for yourself, and all of this also with a 20% margin. Earlier it was 10%, now it's 20% margin. Please note, all of this is without guarantee. Double check the calculations yourself, because when you enter the leverage, you'll actually see on the exchange how much your loss is and whether it matches the 2%. Otherwise, I'd really appreciate it if you could leave a like on this video. Maybe drop a few comments, but what's especially important to me is that if you haven't subscribed to my channel yet, please do so. I have some really exciting videos, including playlists on how to create your own trading bots. 100% passive with crypto trading bots. Super interesting. It's also very well received by the community, and I'll see you next time. Ciao, ciao!